Welcome all. I'm Kerry Lutz and I'm with Bill Powers. This is a production of Mining Stock Educators. Gerald Panneton is with us today. Gerald is Chairman, CEO of Gold Terra Resource Corp. Some say he's a near legend in the mining industry, a geologist with over 35 years experience. He was the driving force behind the incredible success of Detour Gold, raising billions to bring the mine online. He's going to share with you Gold Terra's latest developments and its currently grossly undervalued future potential. The most recent drill results have been impressive. Gerald, welcome. It's great to see you again.
Thank you very much, Kerry, and thank you everyone for attending the presentation of Gold Terra this morning. We appreciate your time, and with all of this, we would like to go and jump into our presentation. As you know, Gold Terra is a very important company. It has done very well over the time, and we are happy today to give you an update. Now, of course, when you look at a public company, we have to state our forward-looking statement, which are written here on page 2, as well as the cautionary statement that you can see as well on page 3. With all of this behind us now, I'd like to talk about our company. Most of you know about Gold Terra's success and, of course, building a land package amounting to 800 square kilometers, thanks to Mr. Joe Campbell, our founder, who started the company in 2013 or got involved in Yellowknife. You can see a snapshot. The town of Yellowknife is 20,000 people, mining town that started in the 1930s with the Con and then eventually the Giant Mine, and of course the discovery of the Campbell Shear and the Con Mine. A very prolific camp that produced 14 million ounces of gold. With all of this, we can say that we have a large land package, and of course, what's very important about the company is that in 2021, we did our first resource update, 1.2 million ounces. You look at valuation, well, here we go. Valuation means today you basically have an option to buy gold for 20 bucks an ounce. That's what the low market or the environment that we are in allows you to bet on a gold price that could go back up again and exploration success. Following, for example, since our last resource, we've done almost 30,000 meters of drilling, mainly on the Campbell Shear, the Con Mine, which is 22,500 meters, and of course this Mispickel. And we're coming up with a resource update based on these additional 28,000 meters in early September, October, right at the time where people may go back to work in September and start realizing, wow, what a value is Gold Terra is. They used to have 1.2 million ounces, and with those 28,000 meters of drilling, they have even more. And thanks to the work that we've done, we made an option to purchase the Con Mine, 100% option from Newmont to get the Con Mine, which used to produce approximately 6 million ounces at 15 to 20 grams. It's a past producer that was shut down in 2003 following very low gold price, when Miramar used to have the company or the property and decided to go and get his log done at Obebel. Miramar was sold to Newmont in 2008 and did never work on the property. Now we have 4 years to evaluate the potential of finding 1.5 million ounces or more on a large property that carries a Campbell Shear, and also which was left with 650,000 ounces of gold at 11 grams. Very importantly, we can assume if we find enough ounces, current liability, but we will be inheriting a lot of valuable infrastructure such as an underground shaft that will have to be dewatered down to 6,200 feet. That is very difficult to put a value on. And of course, have an opportunity to go back and mine at the Con Mine. Some of the results we had on the Con Mine are summarized right below here, of 20 grams over 5 meters and 10 grams over 4 meters, 6.5 grams over 26 meters, which was used for metallurgical test work. And of course, the current drilling is near hole Y88 on the Yellorex portion of the property with 14 grams over 5 meters. Great potential. And as you can see, the con mine is a very small portion. It's the little purple box along our 800 square kilometers where we have been exploring and find 1.2 million ounces north of town in 4 smaller deposits. Campbell Shear still straddled north of the giant mine and has tremendous potential, but was very barely explored over the last 30, 40 years. At the same time, here's a snapshot. The zone are dipping to the west. The footprint or the surface expression of the Campbell Shear is only 2 kilometers strike length. And the upper portion is basically the giant mine that was slipped off by a fault. In reality, very good grade, 20 gram at the con, 16 gram at the Campbell Shear. And on the next slide, what we'd like to show you is an important, what we call the long section. You're looking west, north is on your right, south is on your left. That's the vertical expression of 5 million ounces of gold and over 2 kilometers only, with depth potential as well as south potential to go back. And this is where we've been focusing. And when you look at the potential to the south, there's a tremendous potential to add more ounces. Again, if you look at some of the work we're doing at depth, it's very close to the cross section Y88, where you can see the 14 grams, sorry, over 5 meters. The recent result of 2 grams over 15 meters, confirming the Campbell Shear. The grade was not there, but we know the Campbell Shear was there. And right below, you also have 8 grams over 5 meters. So the question is just, you need to drill more to confirm more mineralization. But are we at the right place? Of course we are. And look at the snapshot of a close-up of the work done on Yellorex, which basically has potential further down plunge, or Y88, and some of the results, including Yellorex North, where we just drilled only one hole, but we intersected the Campbell Shear. You look at the potential between all of those zones, and we definitely have a great potential to carry on and define the minimum required ounces to option the Newmont property and acquire 100% of it. At the same time, we drill 50 by 50 meters, the Yellorex zone, which is very close to surface, down to about 300 meters. And we've identified a very good zone of high-grade mineralization in 2 main zones, which are separated by about 10 meters. They're about 4 to 8 meters in width. And all of the results that we've done, more than 20 holes completed for 11,000 meters at 50 by 50 meters, including some metallurgical test work we'll be able to share with the market when the final result comes out, ready to increase our resource and, of course, our valuation on the value of the con mine. A list of all the results is listed here on page 13. But what I'd like to shift a little bit the focus on the Campbell Shear, which is already an established area where we will be able to find, is the additional potential of finding more gold on the property. Our target is high grade. We focus on high grade mineralization because we feel that the high grade nature of the deposit allows you to invest less for better margin with lesser risk. And when I talk about this is because the potential is there to find more gold. And for example, in June, we released a hole, hole 14, which was basically the first hole on a vein type, which is 1 meter wide. But when you look at it on a 3 meters mining width, it's 32 grams over 3 meters or 70 grams over meters. Very high grade rich quartz veining, very far away from about 200 meters. And I'd like to show you a section for this. This is not far. We're 20 kilometers north of town, and we have a second very good high grade mineralization that we outline at Mispickel. And just to show you the importance of this, 2 different vein systems. The first one in hole 2, which is characterized by the Mispickel mineralization outlined before, has 20 grams over 4 meters or 72 grams over meters, while the one in hole 14, which is about 200 meters west, intersected the 72 grams over meters or 30 grams over 20 meters. Very two different type of gold mineralization in two different set of quartz veining, outlining the real potential of the area to become more potential. I mean, we're not going to build a lot of ounces necessarily or a lot of ton, but we're going to build a lot of high quality ounces that could be mined from underground in the Mispickel area. With all of this, when you look at the potential of Gold Terra following our 2021 and upcoming 22 resource update in September, we should see the progress that the company has done over the last couple of years to generate those valuation, those new discovery in Mispickel, in the Campbell Shear, and of course, the valuation of Crestone, which is a 6-gram open pit nearby. We are creating value at Gold Terra, and we're more than happy to continue to do so. And we look forward, since this 1 year and a half old, which was done for the 2020 drilling, since then, 28,000 meters of drilling will be contributing to increase our mineral resource on the Yellowknife camp. At the same time, we're closely working with our engagement with environment, with social, and with the public of Yellowknife to make sure that we will be working in tandem with our host, the Yellowknife Denise, and as well the Yellowknife town and the government of the Northwest Territory to bring back mining into the Yellowknife camp. With all of this, we'd like to thank you very much for your time. And with this, I'm sure Bill will have a lot of different questions to ask me. Thank you.
Yes, and if you could just submit your questions in writing, I will present them to Gerald. Gerald, the first question relates to the treasury and financing. Obviously, the markets are difficult. Investors want to know what is in the treasury and what are your plans to finance in a bad market?
I appreciate very much the question. It's always a big question. At the end of June, we had approximately $2 million left in the treasury. About $1 million was hard cash and $1 million was flow through. We're going to be planning to go back and drill some wedges from a platform on the Campbell Shear very soon. They are currently mobilizing, and I think the drill will be turning this weekend. And we appreciate the concern. I mean, it's always a concern to have enough money in the company. And of course, we have different alternatives. Flow through and charitable flow through is always available. But it is a difficult market, and we have to adapt to it to make sure that the project keep going forward.
And your preference is charitable flow through too. Would that be correct?
Not necessarily. I mean, flow through is a good instrument as well. I mean, the hard cash currently is the most hardest things to be able to put together. No question, people, when the market crash like this, they basically are very avert to put any money into risky ventures. Even if our project is in town, it will not be as costly as remote project. And the fact that we're focusing on a high grade and not low grade, because the margin are way much better than a low grade deposit, I think we are eliminating most of the risk that people could see for remote project, geopolitical project, or of course, being a low grade deposit. We feel that Gold Terra has the answer with high grade gold objective.
Gerald, the next question is, would any of the northern properties eventually have potential to be optioned to others?
Of course, if you would have all the money in the world to work the whole belt, our strategy is to focus on what is very close to Yellowknife Town, because everybody goes home at night. So within the next 20 to 30 kilometers, there's a tremendous potential. We have several showing, including, for example, the Omer showing, which is a base metal and gold showing, which is further north. We need to work in the winter. When the market is more difficult, we advance project slower. It's not like all the cash is available. But there's no reason for us to option any other property if we can still find the way to be able to advance those projects the way we want.
The question is, are you dealing with refractory ore at all at the Con mine? If so, would permitting a mill be an issue?
It's always a very interesting question. First of all, I have to open a little parenthesis about the refractory ore that is in the Campbell or in the Yellowknife camp. There's a big sedimentary belt. Previously, in the 20th century, before autoclave was invented or used, which is a pressure oxidation system, a closed one, we used to have roaster. And roaster basically will be roasting the sulfide until you get the gold out of it. In today's world, we float and we bring the sulfide down to, say, about a 10% concentrate of sulfide, but with a very high-grade gold. And basically, in an autoclave, we let the water oxidize itself in a very pressure oxidation system, which doesn't require much energy and with no emission. And for those who may be from Yellowknife, you will have some refractory and some free milling. For example, the bottom part below 1,000 meters at the Campbell Con mine portion was completely all free milling, and with excellent recovery through gravity and finishing the sulfide, what was left with, again, what NERCO basically brought to Yellowknife and the Con mine, an autoclave, and which is pressure oxidation. So these systems are usually very environmental friendly. The main reason, for example, for the giant mine for not being very environmental friendly was the roaster and all the basically liability that was left behind because they've never used an autoclave. So there is definitely not a concern for me, but you have to educate and present your environmental impact assessment, your feasibility study that shows you will have a very, very or no impact at all. We're in a different world today. Energy is a big issue. And of course, where do you source your energy? I mean, Yellowknife is a diesel generator plus some hydroelectricity. So there's a lot that can be done towards improving the life of the Yellowknife people by increasing hydroelectricity and, of course, supplementing a project that will be a very good example of environmental friendly with no footprint.
Gerald, you've stated your goal is at least 5 million ounces. At your current pace, how soon could you possibly get to that goal?
Well, in the current market, it will take longer than if we had a market when I was, founding Detour Gold and bringing Detour Gold into production. I started Detour Gold, and in the current market, we were back then, from the IPO to the first gold pour only took 6 years. But there was a construction program of 26 months to build the mine, which was built on time. What's very important about understanding is that the current market is not very helpful and very supportive to advance project as fast as you could. So you have to take your time. You have to choose your target. You have to focus more on what will be feasible very quickly. We have 4 years to earn into our 100% interest into the Con mine. And to be honest, if I could find it before the end of 2023, I'll be glad. But we need more support. If the market is not there, we may take a bit longer than 2023. But our goal is to definitely advance the project as fast as we can in the current market.
Next question. Gerald has previously mentioned that Newmont has personnel working closely with him. Can you ask him to speak a bit more about that?
Well, it's very simple. When you enter into, and remember, again, it took us 2 years to sign the deal with Newmont, from December 2019 when I joined the company to November 2021. So you establish a relationship of trust with Newmont. We're currently working very closely. For example, we're planning to eventually have a road that will have an access to be able to drill 12 months a year. Because, in Yellowknife, the Mispickel area, for example, can only be drilled in the winter. But the Con mine, we need to be able to access and drill 12 months a year. And our goal basically is to get through the consultation to build an access road to be able to build, to drill 12 months a year, the Campbell Shear from surface until we have acquired the property and then go underground to continue our exploration. There's a great potential along the Campbell Shear. I mean, if there was 5 million ounces produced over a 4 square kilometers stamp or area, you look at what's onto the south, what's at depth. The deposit is still open at depth and it's free milling as well as further south and at depth. But we need those platforms to be able to drill 12 months a year and advance the project very quickly.
Gerald, this next question is about an analog. Is there a direct comparable in terms of deposit type, grade, growth potential that you are aware of?
Not necessarily, because it's interesting when we ask the question, how many AMLOs there is, how many Timmins? Timmins is mainly 2 big deposits, the Dome and the Hollinger McIntyre, but there's a lot of very good one around it. It's the contact between sediment and volcanic. It's hosted in a big shear zone. It's a shear hosted. Depending on the country rock, you will have different sulfide, different way that gold will present itself. But when there's so much gold, you can see it. Does Obuasi, for example, in Ghana, which is a 20 million ounces deposit, maybe is one of the closest one. There might be some other one as well that have not been discovered or have been discovered, but they're smaller and they need some more work. I think when you look at the giant Con deposit, it is a world-class deposit. It's 14 million ounces of gold in a very small area that had tremendous potential along a shear structure that extends for 70 kilometers. In 2020 winter, we drilled 2 holes along the Campbell Shear north of the Giant Mine. We had some success. We did intersected the Campbell Shear, no question. We went through the stratigraphy. And we're looking forward to go back there, except it's more exploration than the Con Mine is, where the Con Mine is more like definition and extension. So people have to be patient that there is a tremendous potential to find more gold deposit on a property, and it's just a matter of time to do so.
Gerald, the next question is about PDAC. How did your PDAC meetings go? Are you getting any interest from institutions?
I think the question is kind of funny because I think I know where it comes from. The PDAC is, you do a presence at the PDAC. Companies are looking for it. But what I can tell you about the current institution level is that there's none. All the institutions are basically suffering from the current situation in the market. So we have to tap and be very creative about finding hard cash dollar and hard dollar and attention to the current market. It's very simple. If an institution has a lot of share into a small company like this, they basically are not, they have to have a level of risk tolerance. What we do bring to Gold Terra, and that's what's important about, it's about the team. It's about the directors of Gold Terra. It's about the team working from Yellowknife. It's about the among us experience that we bring to the table and knowing where to focus to get the best value for the money you invest in Gold Terra. Like I said, you're buying a share for an option for $20 an ounce, and gold is $1,700 and could go bounce back. Yeah, gold is under pressure these days because it's probably one of the best value there is in the world, because it is a value. Gold is physical and valuable. So when you invest in Gold Terra, you invest in its people, you invest because you believe in the property, and as a chairman and CEO, you also invest in a person that owns 6 million shares, almost 3% of the company. So you're not investing blindly.
Gerald, this next question, in this inflationary environment, what is your current cost per meter drilling?
Our average in 2021 was approximately $200 per meter. all in, including the assays, our people in town. Don't forget, everybody goes home at night. So we're not comparable to people. I look at Hope Belt in 1996 when BHP was selling it. And the cost of drilling back then was $350 per meters. And we're talking about something that is 16 years ago. So you can imagine that inflation now is probably looking at $400 or $500 per meters. When you have the oil price at $100 a barrel, it doesn't help for the diesel price or for anything. So we do have an increase in inflation rate, but because we're in town, we can manage to control some of those costs, avoiding, for example, using the helicopter as much as we can, and drill in the winter using an ice road. But look, we cannot escape the market. We cannot escape inflation rate. So, of course, when the oil price goes up, we all suffer.
I have two more questions here before me, Gerald. First one is with staff. Are you finding it difficult to hire people from Yellowknife?
No, we have our team in Yellowknife. We have our team of Ryan, Aaron, and Hayden. We're very low profile. We don't have an office. We try to keep everything low. We work from home, a lot of us. We have Zoom meeting every week, and we don't have any problem hiring the people. Of course, if we had 10 rigs running, that might be different. We only have, this winter, we had 4 rigs turning, and we had no problem moving the project along. So no, everything it's practical to be in town. There's no question.
All right, last question. Does the 2 million ounce in resources Gerald hopes to achieve on the next resource estimate include the 1.2 million inferred resources, or is it an additional 2 million ounces on top of that?
We're all going to find out when we release the resource in September, October.
And Gerald, just I'll have a follow-up on that one. Is there, what's the strategy or why put out the resource now in this type of market when you could potentially expend your effort, towards further drilling? Could you delve a little bit more into the strategy of why the resource estimate now? Because you're nowhere near 5 million ounces yet.
Of course not, but to get to 5 million ounces, you need to get to 2, 3, and 4. And I think you need to be transparent about it. If you want us to talk about the resource and where we're at, we need to inform the market on a regular basis. And I think it's very important. If you were looking back at the Detour days, I didn't got to 30 million ounces in day 2. We got 1.5 to start with. We moved to 3, 5, 7. We were then over 10 million ounces, and then eventually we end up with 16 million ounces in reserve. And the mine has been producing for almost 10 years, 5 million ounces, and the reserve is still 15, 16. So look, the statement of a resource, the 43-101, allows us to be able to talk with everybody and show the progress and give us a better valuation. And the best way to avoid dilution, it's to update the market on a regular basis of our progress. And if we're not progressing, then people will stop buying the share. I think it's very important that if currently, look, I can't believe the valuation we have today in the current market. It doesn't make any sense in my mind. But I don't control the market. I'm just a small, player in the market doing work to provide value for our shareholders. And when the market is what it is today, you need to keep showing the market that you're progressing towards your 5 million ounces.
Thank you, Gerald. Kerry?
All right. Well, that was an excellent presentation, Gerald. Appreciate that. I think from this presentation, you can begin to appreciate Gold Terra's true value when the market eventually returns to some degree of normalcy, whenever that might be, hopefully sooner rather than later. Drill results have been some of the best in the industry, have gotten better with each new hole drilled. At $20 per ounce in the ground, it's trading at a huge discount to its peers. We didn't even really discuss that. Gerald has put his own money on the line to make this company a success. So go over to goldterracorp.com, sign up for the notifications so you get the latest information, ticker symbols on the OTC, YGTFF, and on the TSX Venture, YGT. Thank you all. Presentation is over. You can expect a replay link in the mail so that you can watch it again, see anything you might have missed. All who attended, have a great day. Thank you so much.
Thank you all. Thank you very much.